And we're going to talk about the Richemont numbers, which came out around about 8 o'clock this morning. Let me just tell you what it says here. I'm reading off my screen. It says, Compagnie Financière Richemont SA. Strong trading indicates likely increases in operating and net profit for the first half year. Ray, these numbers are quite glamorous. They say that there could be a likely increase in operating and net profit for the first half of the year between 20 and 40% against the comparative prior period. I mean, even the most bullish of luxury goods investors must have been surprised by this one.
Yeah, I mean, if we just have a look at the update, they're talking of, for the first 4 months of the year, growth in sales of 24%. And if you exclude the impact of foreign exchange, the growth has been about 13%. So clearly the numbers are benefiting from the weakness in the euro, which is their reporting currency. And that is actually a big driver of the sales. But if we just look at actually a little bit more in detail, they say 4 months the constant currency growth was 13%. But the April number was up 20%. So there has been quite a marked deceleration in the sales growth in the latter 3 months of the year, around about 10-11%. But yeah, but still quite a bullish update.
You sound sort of fairly circumspect about it. I mean, do you think that the currency factor is being overplayed here? Obviously, the currency factor is important because they report in the euro, and the euro has been sub 121 at one point. Okay, it's nearly 123.5, 124 at the moment. But is there an underlying strength? Because there was a worry, Ray, about a month ago, 6 weeks ago, that the Chinese were slowing down markedly in their luxury goods expenditure. Is that a factor for the future, do you think?
That is still in play. So, I mean, if we just look at the retail sales numbers that came out from Hong Kong, which is obviously their number one market, the sales in retail increased by only about 3% in June. So that will probably start to impact on the sales growth rate going into the latter half of the year.
Okay, well, that is something to worry about. I mean, give us a sort of an oral pie chart, if you like, of what the sales of Richemont are these days, because it's not so much America and Europe anymore, although they're still very important. It is the Far East, it is Asia. How much of an effect does the Asian market have on their results?
No, it's quite important. If you just take Europe, I mean, Europe used to be the biggest number for sales, and that has come down to about 33%. But Asia, excluding Japan itself, will probably go up to about 43% of sales. Now, if you take the Asian consumer, bearing in mind that they do travel a lot, and that about half of the sales that they record in Europe are to travelers, then the Asian consumer actually could easily be about half of Richemont's sales. So it is a very important factor in their lives.
Absolutely enormous. So they must watch the PMI numbers and the GDP numbers and the retail sales and indebtedness numbers very, very closely every month coming out of China. So just clarify this for me, Ray, if you would. I mean, I remember seeing something on one of the international TV stations, I think it was Sky News, and there was a sale at Selfridges in Oxford Street in London, and it's a famous sale, as you well know, and people queue up overnight. And the queue that started about midnight, 1 o'clock in the morning, waiting for the doors to open at 9 o'clock the next morning, almost exclusively people from Asia. Does that count as a European sale, or does that count as an Asian sale?
No, it's reported as European sales. So if you look at European sales growth rates, I mean, probably in the mid-teens, you could basically ascribe all of that growth to the travelers, and the domestic consumers obviously under pressure because of the austerity measures that are in place in the market.
Let's just read into this very, very brief statement, but very, very encouraging one. It says here, many factors driving these results are uncertain and beyond the group's control and may therefore lead to actual levels of profit growth for the 6-month period below or above the ranges indicated. So they're sort of covering themselves, and they've given us this wide 20 to 40% range. But what's your gut feeling? Is it going to be closer to the 20 increase or the 40 increase?
Well, I mean, there are a few funnies in the accounts, like the hedging practices that they have. So, but most of those hedging gains are now not reported in profit. It comes through in your financial line item or the interest line. So, I think the operating profit growth should obviously, like we say, benefit from the foreign exchange benefit. So we can probably be around about in the midpoint of that guidance. The unknown is obviously the hedging issue. So, and you can only make a judgment call on that once we've hit the end of September, which is the half-year period. So, but I mean, fundamentally, if you look, the underlying trend is still quite strong. Although, like we just say, that the rate of growth is coming off, and one just have to be aware of that.
What is your guidance, Ray? Very final question. Is it a buy and hold? What is it?
No, I mean, obviously the rally today of about 6% has sort of, wiped out most of our upside potential. So, I mean, there is still a bit of upside in the price. So it should be there between the hold and the buy area.
Okay, Ray, thanks so much for your time this lunchtime. That's Rey Wium from Renaissance Capital talking about the excellent trading update coming out from Richemont.